Welcome, everybody, to Monday, May 22nd, mentorship for pairs trading. Continuing with the May pairs trading mentorship. As you know, so we've gone through all the information. So you guys should have a pretty good idea now of how to identify setups, where to enter pairs, how to trade pairs, essentially. And we went through and I showed you last week a lot of different trades I had taken previously and what the charts look like on the right-hand side of the chart when I was looking to enter into a trade. Now, this is kind of like the follow-up so that you can ask questions, make sure you get the answers you're looking for, make sure you understand everything you need to understand. If you have questions about trades you placed, I'd be more than happy to answer those, pull it up and look at it for you. If you have something like a trade log or trade plan you want to send in to me, you want me to review it, I'm more than happy to do that for you. But essentially, this is to make sure that you fully understand everything that you should understand by next point, which means make sure you understand how to actually place the trades you need to place. Make sense? So Bill, you just said, do you have a separate window for each possible pairs trade that you might be interested in? How do you identify them so quickly? And yes, I do. So let me show you this really quick. Log into a simulated account. Okay. I'll get rid of this. And then let me pull this up over here. So this is what I have. I don't have all the pairs, but I have a bunch of them. Just set up this way in different tabs across the bottom, so I can quickly just look at one or the other, whichever one I'm interested in. And I just am always going through here and updating the front month and back month so I know where it should be trading at. Make sense? But yeah, I have a different workspace for each pair. Okay. When do we trade from the spread ratio and or from the spread difference? So you can trade from either one, basically is what it comes down to. I prefer when both of them are lining up. So for example, when we were at an extreme, this is gold platinum, when you're at an extreme on the spread ratio and you're at an extreme on your spread difference at the same time, that's when the best opportunity is going to present itself, when they're moving pretty closely together and they're both saying the setup is happening. So for example, let's go look at soybean meal, the one that we entered into earlier today, that I closed out of that, as I mentioned, in the trading room or in Slack, because I didn't know if I was going to have to jump up and run to the hospital or not for my sister-in-law if my wife needed something. But this is still a good setup. And what I was looking at here is our ratio is at an extreme, okay? Normally it doesn't trade much higher than where we are. It gets up around here and pulls back, gets up around here and pulls back. And our spread difference was starting to roll back over to the downside. So we had dropped all the way down to the lower end of it, bounced back up off the lower end, off the support on the difference, and now we were starting to roll back over once more. And the last pair that we did here, last time we did the soybean meal pair, was right back here, and we were at an extreme on the difference, or on the ratio, excuse me, and the difference was getting very close to the upper end of its range. In TOS's new release, they have added moving average on price ratio. Do you see any value in that? Yeah, that would be actually a pretty nifty indicator to use, because what you'll do is the average is where it typically is trading. So if you're looking for it to get to an extreme, and you're trading a mean reversion, you're doing quick mean reversion, then if it pulls way down and the average is up here somewhere, then you jump into the pair. and you're looking for it to revert back to where the average is. You could use that for profit-taking points as well. Make sense? Yeah, I have not looked at a moving average on the spread ratio personally, but thinking through it, I think that would be something that could be pretty interesting. It could work. Okay. Manuel, did that answer your question about spread difference and spread ratio? Which one you want to be looking at? That you're really just looking at a combination of the two? Good deal. How has everybody's trading been going? Have you been placing any pairs trades? Are you making money, losing money? Hitting singles. Excellent. That's what pairs trading is all about. Singles and doubles over and over and over again with a very high probability of success. Just be patient. Let it build. What I always tell people to do when you're starting to grow an account, no matter what account size you're trading, okay, no matter what account size you're trading, I always tell everybody, look, start off looking for singles and doubles over and over and over again and get to the point where you have a cushion of profits. Okay, and then once you have that cushion of profits, then what you do is then you turn and you say, okay, now that I have these profits, I'll increase my position sizing. And that way, what you're doing is you're playing with house money from that point. And say, for example, I'm willing to risk half of my realized gains before I decrease position sizing again. So let's say you have $2,000 in realized profits. You're up $2,000 on your account. So you increase your position sizing, and if it makes money, good deal. Then you're going to be growing your account faster. If for some reason you take a couple trades and they happen to be losing trades, and you lose 1,000 of those $2,000 in profits, then you go, okay, I'm going back down to my original position sizing. I'll build the account back up, and then we'll try it again. And that way, you're giving yourself the opportunity to grow the account much faster. However, you're making sure that you're playing with house money. You're not risking blowing up your account. Because worst case scenario as a trader, worst case scenario is you blow up your account. You do that, you're done. There's no more hope left. You know what I mean? So get to the point where you've grown your account a decent amount. Then you start looking at increasing position sizing. And then you start growing your account faster. Trading house money. What's the smallest account size you suggest for using pairs trading? So I cannot answer that question legally because I'm not an RIA, so I can't say you need to have this size account to trade. Personally, one thing I'm doing right now is I opened up a smaller account that's like a $17,000 account that I want to show people how to grow it with pairs. And I'm only trading pairs in that account. It's up about $3,000 right now. But that started off as a $17,000 account. Because once I get that track record together, then I'll kind of show everybody this is what you can do with pairs, if that makes sense. You got to be able to meet margin, Bill. I can't tell you. I mean, legally, I'm not allowed to tell you. Talk to your broker. Any other questions? What pairs have you guys been focusing on here recently? One pairs trade I want to talk about that I had that was in the trading room as well is soy versus soybean meal. Okay, that's that one I was just talking about. And I want to point out why I traded it the way I did, because there was some confusion in Slack. Some people were asking about it. They were saying, well, how come you got it? How come you're using a 1-to-1 ratio as opposed to something like 3 soybean meal to every 1 soybeans? Remember? Because that's, if you remember, Andres was in Slack and he said he was in the same pair, but he was using 3 soybean meal to every 2 soybeans because he was going off a notional value. Now, the reason I did it the way I did at a 1-to-1 ratio is due to having a bearish outlook. By having a 1-to-1 ratio, I was essentially weighting my trade to the downside more. So if soybean meal sold off, I would make more money. If they bounced, I was still hedged, but if they sold off, I would make more because I had more notional value to the short side than I did to the long side. Okay? And the reason I did that is because with soybeans at the time, we were very bearish due to a number of different factors. I went over them in the Friday mentorship session. I think everybody in here was in that as well. But we had the bear flag on the weeklies. We had the shooting star on the weeklies. We had the micro trend on the dailies. And then we ended up topping off with the evening star or the reversal doji on the dailies as well. So that was the reason I did that. Remember we talked about a couple weeks ago that you can, if you have a strong enough bias, now I don't normally do this, but if you have a strong enough bias, a strong enough reason, you can weight it one way or the other. That's what I was doing, was weighting it to the short side because I had a bearish bias. That's why when this tanked right here, we did good on that pair. I haven't simulated, but there are times difficult to read the chart, read the trade. I wonder if you would have a standard entry form, i.e. spreadsheet with symbol, short or long ratio. No, because your ratios are always changing. I can't just give you a number with the ratio, or a chart with here's the ratios that you use. Ratios are always changing depending on the price. Because again, we're going off of notional value. Remember? So as price moves, the notional values move. Slack is very helpful. Nice to be able to look at what others are seeing. Yep, absolutely. And what we're trying to do with Slack is make it more of a community, so you guys have people to talk to, other traders that are doing the same things as you, going through the same hard times as you, or have been through them and can help you learn things. I mean, I think Slack's a really useful tool. Any other questions? Is everybody making money? It seems like everybody was saying that whether they're trading live or simulated, are you making money? No, I don't want to make a strictly pairs trading thread in Slack because it gets spread out enough as it is. We have elite futures, general, and options. We're trying to keep it condensed, basically. Is anybody losing money trading pairs? If you are, what pairs have you been trading? What are the trades you've been taking? Doesn't seem like anybody's losing money, which is what we want to see. That's excellent. There's a couple people I know that are, in the past few months, up over $10,000 trading pairs. They just got started. So that's really good. They're from the April pairs trading mentorship. Good deal. Not losing, just been trading things mentioned in Slack and watching behavior. Are you understanding how they work? Is everyone understanding why the pairs are happening? Good deal. Excellent. Well, this is going to be a short session then. Does anybody else have any questions? No problem, Peter. The last trades were both soybean, soybean meal, and we had some gold silver pairs. So soybean, soybean meal, the one was entered today. And I explained that already because we're at the extreme in our ratio. And our spread difference is starting to roll over back to the downside. So you're short soybeans and long soybean meal. And soybean meal has just stalled here recently. And soybeans have retraced back the past couple of days. That's a pretty good setup. I expect that to play out tomorrow or the next day. If you wanted to, with that trade, that wouldn't be a bad one, in my opinion, to weight it to the downside. So instead of doing the 2 soybeans to every 3 soybean meal, you do 1-to-1 ratio. So it'd be 1 soybean meal at the same time. And that way you'd be weighted to the downside, because if this daily bear flag triggers, you expect it to head lower. Or what you do is you start off with the actual ratio, which is 2 soybeans, 3 soybean meal. Watch this daily bear flag, and once the daily bear flag triggers, then you add a contract to soybeans to increase your ratio to the downside, or increase it to have a directional bias to the short side. You can do that as well. So you're hedged until it triggers the short setup, and then you enter an additional contract or 2 or 3 or however many you want, depending on how many pairs you're trading, to weight your trade to the downside. So you'd still be hedged, but you'd have a greater weight to the downside. The other ones that are interesting are gold platinum. Here's not bad either. Overall, we started to pull back down. We just bounced and we're starting to roll back over again. So I wouldn't be surprised to see gold push lower and platinum jump. No, I don't really look at the correlation all that much unless I'm looking at a new pair, so I can actually get rid of that. But when I look at the correlation, all I'm looking at is how correlated are these markets. Make sense? Any other questions? If everybody's making money, though, I feel like I've done a good job. That's the goal, right? That's all right. Always start off simulated, then go live. I tell everybody to do that no matter what market you're trading. Okay, everybody. Well, that is going to be it for now. I'm opening up an account with Infinity. I want to open up an account specifically for pairs trading with Infinity because they do portfolio margin and they'll do CME recognized pairs and decrease your margin quite a bit. I mean, for example, the BUB spread with Infinity is only, I want to say it's like $1,200 margin requirement per pair. So it's nothing. Whereas if you did each of those alone, it would be like $10,000 in margin. If you're going to open an account with Infinity, go to Patrick Zielbauer. If you want to know what his information is, just shoot me an email. I'm more than happy to give it to you. He's a great guy to work with. So, all right, everybody. That is it for today, though. Our next session, so actually I need to put this on here. Our next meeting, because Monday's Memorial Day, we'll be out of the office. So the next meeting is going to be on Tuesday the 30th at 5 p.m. Okay? So Tuesday the 30th at 5 p.m. Eastern, same time that we had tonight. It will be our next meeting. Bring your questions. Take screenshots of your trades if you want me to review them and say this was good or this was bad or anything else. I'd be more than happy to do that. Make sure you understand everything. This is one of your last opportunities. So I will see you guys in a week. Have a great rest of your week. I'll see you in the trade room tomorrow morning. And until next time, happy trading, everybody.